Before I ever consider taking a single trade, I do the exact same thing literally every morning. The same process before I turn on my PC, the same process once I hop onto the charts, and the same process to focus and prepare myself for New York Open at 9:30 a.m. Eastern. A lot of traders overlook the importance of having a morning routine before they hop on the charts, but I will tell you, as someone who's been doing this for over 5 years, and I've seen the side of me that doesn't have a routine, and I've seen the side of me that does. Your morning decides your P&L. And I have this little graphic right here. What can you do wrong? You can have no routine, sleep in late, doom scroll right when you're in bed at around 9:25, then open the charts and start chasing, having no idea what your plan is, or you can lock in, wake up, meditate, eat, do whatever you need to do in the morning. Feel like you've actually done something, mark your levels, mark your points of interest, and then you're focused and actually ready to take a trade by the time market opens at 9:30. And just a small tweak, right, in either direction is going to make a very big difference, and you'll see it in your ability to trade effectively. So I personally like to do a quick meditation, eat a little bit of a meal, nothing crazy, and then I'll be on my charts by about 9 to 9:15. I like to do all that meditation and eat stuff before I even turn on my computer, right? I just want to wake up in a clear headspace, not be stuck to a screen right away. Then I'll turn on my chart and I'll start looking at the market. And it's pretty simple. From there, I will really just chart. And to go over what I care about when I'm charting, I usually start with looking at the weekly because if we're in any really important weekly area, it's worth knowing. Now, usually this is not going to be very important in terms of just transparently. There are not many days where I will genuinely take a trade and be able to say that's because this weekly candle looked like this or etc. But it happens sometimes, and it happened just the other week. We opened last Monday inside of a weekly bullish fair value gap. Okay. And so that was like the first important weekly candle in this entire stretch right here. And once we finally got down into it, you can see we had a very, very large pump up. So last week, the weekly candle actually did help me decide what I wanted to look for in terms of my bias, drawn liquidity, things like that. But usually the daily chart is where I'll first really start, and that's going to be the most important. So as you can see on Thursday, April 2nd, if you just go to replay mode, we dipped back into a daily bullish gap that came off of a bullish inversion out of a weekly gap. And so you can see right then and there, you're going to want to look for longs in that scenario, right? So I'll look at the daily, of course, because it's important to mark out any higher time frame PD arrays. And then I'll just do some top down analysis. I'll look at the 4 hour and look at this right here, right before New York, we were starting to get a positive reaction off of this bullish 4 hour, which is also the bullish daily, right? And so you just kind of keep going and you can end up finding really good setups just looking at different time frames. You want to start higher and then thin it down rather than start low and go up. It's going to be much easier if you start higher because the higher the time frame and the more obvious the level, whether it's a fair value gap, some drawn liquidity, the more important it's probably going to be. So right here, for example, this is what the market looked like at 9:30 a.m. or right before it. Okay, so this was market open. Now, with this context, like I said, we're inside of a 4 hour bullish gap, a daily bullish gap. We are delivering out of a weekly bullish gap still. And we have a lower time frame inversion going on right here after sweeping out this internal point of liquidity. And what do we see above us? Well, we see on the 15-minute chart really obvious trendline liquidity, right? These stacked highs are all likely to get run. Not to mention, we have a massive unfilled 15-minute bearish fair value gap right here. So when I see something like this is automatically going to be a very clear sign to look for longs off the open, which ends up panning out to perfection, right? We end up getting a really strong push and, you get hundreds of points off of this move. So the point in that is, I would not have been so confident in a setup like this had I not marked this weekly bullish gap to understand we probably have a lot more expansion we could get off of this because this is a massive level on the higher time frame. And so far up to this point, we're only up, 700 points from there on NQ. So I'm expecting continuations very possible, not to mention you look at the 4 hour and the daily, and we're wicking back into a bullish fair value gap. So when you combine those factors and then you thin it down to the 15-minute, which is kind of where the lowest point I really like to go to find my draw on liquidity, which you can see right here. We have trendline liquidity plus this bearish unfilled. If you do all that mapping, this 15-minute chart will look very clear to you. If you don't do the mapping, it's going to be harder to discern whether or not you should expect this to dump through or not, because you haven't put in the time, you haven't put in the effort to actually map that out. So like I said, once I get onto this 15-minute chart and the market looks like this before 9:30, I'm obviously going to mark my session levels. Now, you have the London high right here, which is going to be very, very important. Asia high is all the way up in this range, but we do have this giant unfilled 15-minute. So these two areas are going to be my main points of interest, right? You want to be marking these things. Now, we actually have equal highs at London high, which makes it even more of a high probability setup. And so doing all this research on the higher time frames, like the 4-hour, the daily, even the 15-minute, is going to allow you to see things more clearly. So once the market opens on the 1-minute, yeah, we get a nice little inversion gap set up here that you could take for a little quick scalp short. But remember, I'm interested in longs because of all the context I've given. So yeah, that might have worked a little bit, but this move up did not sweep enough liquidity, right? We didn't sweep any of these 15-minute highs now on the 1-minute chart, but they were obvious on the 15, and we haven't ran back to that unfilled gap. And so based on that, I'm not willing to short there. But we do get a clean long setup down here, right? This is a very clean long setup right here. And you could even enter down here if you just had your stop at the low of this move. But I'm fine taking a long here because of the context of all of this liquidity. I don't need to see this low get taken because I've already done the research. I've already mapped things out, and I know that this area is all going to be important. We even have exact equal highs right here on the 1-minute chart, which we end up absolutely ripping into. And that's about a 150-point trade to the upside if you caught it down here. So that's a really clean execution. And once again, what prepares you to be able to just no hesitation entry on these 1-minute, 2-minute, 3-minute setups that might seem chaotic in the moment, what prepares you for that is having a very clear picture of every time frame above that. And I'll repeat that. What prepares you to enter lower time frame setups is having a very clear picture of every time frame above that. So if I didn't have a clear picture of this 15-minute trend line liquidity look right here, the equal highs on the 15 right here, the gigantic unfilled 15 and 1 hour actually right here that needs to get rebalanced into. If I didn't have a good understanding of all of those conditions plus the supportive structure below us, I would see this in real time and I would hesitate to enter. Why would I hesitate to enter? Well, because this looked bearish or because this low didn't get taken. And all of these things might make me hesitant. But if I just follow the plan and I see, okay, well, yeah, we didn't take this low, but this reaction off here, and especially once we get past 23.77, that's extremely bullish. So I'm looking for longs, no questions asked, and it ends up panning out. I actually did take a trade off that play. And once again, understanding the context, doing my pre-market routine helped me. And I can't stress enough how important it is to have a routine. The more focused you can be when you get onto the charts, the better you're going to perform. And I do find that not being lazy, not doom scrolling at 9:25 and then turning on your PC, like taking some damn initiative and getting out of bed in the morning really helps with trading. And I'm saying that as someone who used to struggle with it. So I hope this video helps you guys out. Hope it provides some value to you guys. If it does, make sure to like and sub. I'll post a ton more educational content on here every single week to help you guys learn. I also have a very active, free, completely free, no credit card, no email, no BS trading Discord. Join up. I'm helping you guys learn in there pretty much, trading live sometimes. And then I also have a trading X where I post general thoughts about the market and, futures throughout the day. So if that interests you, join up the Discord, follow the X. I'll catch you guys in the next one. Peace.